25 years ago, when I was still in college, I was in Taiwan. Literally 25 years ago to the day, I was in Taiwan. And when you're in Taiwan on 10/10, which is Taiwan's Independence Day, at least back in 1990, it was super crazy. I saw the best fireworks show of my life, which was basically 75 minutes of grand finale. So just imagine any fireworks show you've ever been to, the best one, just think of the best one you've ever been to, and then think of the last 2 minutes of it, and now imagine 75 minutes of that. That's what Independence Day was like in Taiwan in 1990. It was just amazing. And it just brings back such good memories of living in Asia, learning the Chinese culture, learning the nuances of southern China to northern China to Taiwan, Hong Kong, Singapore. Just super, super interesting culture. So interesting that was my major in college. I was an Asian studies major. And one thing I can tell you about the Chinese culture is they get the value of gold. They know what it's worth. They've been through enough turmoil. They have not been in stable countries. And they've got the idea that gold is something that can, keep their value, hold their value. So with that, I want to spend a little time for us to look at gold. And I have 10 price charts. And not one of them is a price chart of gold, but it's going to tell you a very important story about gold. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is gold. Is it time? Is it time to get some gold? Is it time? Did it bottom? Shouldn't it have bottomed by now? It peaked back in September of 2011. It is, let's just call it September, I know it's October, of 2015. 4 long years. Is it time? So what I want to do is I want to look at 10 price charts, none of them of gold, to tell us what is going on. So the first price chart is a ratio. In fact, almost all of them are going to be ratios. So what you're looking at here is I'm comparing the Precious Metal Mining Index, the XAU Gold Bug Index, against the S&P 500. And if you see the blue line, you notice that that's falling. The blue line is the 70-day exponential moving average. So if that's moving lower, that means the Gold Bug Index is in much worse shape than the S&P, or the S&P is growing much faster than the Gold Bug Index. Now, if you want to be in gold, you want to see just the opposite on this chart. You want to see it going from lower left to upper right. So the first thing we know is the Precious Metal Mining Index is greatly underperforming the S&P 500. So that's number one. Okay, next chart. This is the same Gold Bug Index, but it's comparing itself against gold itself. Now, when we are in a long-term secular bull market with gold, you want to see, and historically you see, the precious metal mining shares moving higher than gold. And as you can see on this price chart, the precious metal mining shares are falling more than the price of gold. And you want to see just the opposite. So chart number 2, or ratio number 2, says gold is still trending down. Price chart number 3, this is comparing small cap precious metal mining shares with large cap precious metal mining shares. Now what you want to see here is this price chart moving higher. Now the 70-day is still the blue line, as it will be on all the charts, and you can see about March of this year it started trending higher, but there's this long-term downtrend that it hit up against, and it has started moving lower, and now the price of this ratio is below that 70-day. So small caps are now either moving up slower than large caps, or they're moving down faster. But the point is, this ratio is telling us that the trend is still down for gold. Okay, the next one. This is comparing the price of silver with the price of gold over the last 5 years. And again, this price chart is falling. What that means is the price of silver is falling harder than the price of gold. In a bull market in gold, you want to see this price chart doing just the opposite, going from lower left to upper right, but it's actually going from upper right to lower left. Now, back between 2000 to 2012, the very end of 2011, that's what you saw. You saw silver gaining in price much faster than gold, but we do not have that today. Now, this is a little confusing. This is called bullish percentage, and basically what this is this price chart is looking at the 32 precious metal mining stocks, and it's looking at what's called a point and figure price chart, and it's simply asking itself how many of them are rising in price and how many of them are falling in price. So at the very bottom here, if it hits the 0 mark like it did in 2013 once, twice, 3 times, like it did twice at the end of 2014 once, twice, and like it just did twice, that means there are 0 precious metal mining stocks in this index that are going up. Literally, they're all falling. Now, as of today, it's back up to 30%, but what I wanted to point out the most on this price chart is that if you can see kind of the trend, we're looking at the 70-day moving average, you can see that the trend is still down. And we want to see, again, just the opposite with this. Now, this is actually a price chart of the gold bug index. Now, this goes back to 1995, and you can see the low here at the end of 2000, and you can see we're really, really close to the low here. Now, this is a weekly price chart, meaning it just shows you the low of the week and the high of the week, and it plots, sorry, it doesn't show you the low and the high, it just shows you the closing of the week. And so you can see even with this bottoming that's happening here, and it could be bottoming right now, the precious metal mining shares. I'm not saying it is or it isn't, it could be. I'm simply pointing out it's very close to where it bottomed back here in 2000. Has not quite touched it. It is very close to it. But as you can see here, this is a 70-week exponential moving average. You can see very clearly that this trend is down and that it peaked here in 2011. And you can see from the end of 2000 to the end of 2011. And it was a very short, scary move. But it did move higher. So this is in a clear downtrend right now, and we do not want to see that in a clear downtrend. Now, if this comes down here, the price comes down here and breaks down here, breaks below, it's got a far way to fall. I'm not saying it's going to do that. I'm simply saying it's looking for a reason to bottom and break out, and so far it hasn't done that. What I also wanted to show you was we want gold rising in value against the currencies that it is normally compared to. So I want to show you the 4 largest currencies on the planet, the 4 largest fiat currencies on the planet, and I'll show you kind of the newest member of the big 4, and that's the Chinese yuan. And again, this is a ratio chart, so if you see the line falling, that means gold is falling more in value than the Chinese yuan. So you want to see this doing just the opposite, but right now, gold is falling in Chinese yuan terms. The next price chart is gold being compared to the US dollar. Now, the Chinese yuan is pegged to the US dollar, so these two charts should look very similar, and in fact, they do. But you can see with this ratio of comparing gold to the US dollar, it is falling. And, has it bottomed right here? Is it going to start turning up? We'll see, because we do want to see this moving up. We do want to see the 70 period moving higher. We do want to see the price moving higher. And right now, gold is not increasing in value when comparing it to the US dollar. The next one I want to show you is gold being compared to the euro. So it actually looks slightly better to the euro. It bottomed back here in 2014, and then the euro decided to start devaluating itself, and it has actually been doing better. So for my clients in Europe, they still own their gold. I have not told them to get out of their gold, and in fact, that has been in their favor because their currency is the euro. Most of them is. Most of my clients' currencies who live in Europe is the euro. And so if you have the euro, gold actually over the last almost 2 years has been a good place to be, especially when comparing it to your cash situation. And then the last major currency on the planet, in no particular order, is the Japanese yen. And you can see this has been a little bit more, or maybe a lot more, erratic. Very high, very low, very high, very low. And that's saying a lot to really the Japanese currency and how volatile that currency has been. But if you do see, here's the bottom in the mid of 2013. Yes, the moving average didn't dip way down there, but you can see that really since 2013, the last 2.5 plus years, gold's been appreciating in value against the Japanese yen. So if you get paid in yen, or live in Japan and get paid in yen, or you get paid in the euro, gold has been holding itself up quite well against those two currencies. It's just the dollar, and because the yuan, the Chinese yuan, is connected to the dollar, we've got two of the major currencies where gold is underperforming, and the other two it is outperforming. Not to necessarily a huge degree, but we got half of it in our favor. So that's good. Like, we've got some good things going. But from these 10 price charts I showed you, again, none of them are gold. They're all ratios of gold, which I love showing ratios because it kind of gives you the inside story of what's going on. These charts, they're still price charts. They tell us what is happening, which I think is just so fascinating because we want to see gold rising against the four major currencies. We want to see small cap mining shares rising faster than large cap. We want to see silver going up in price faster than gold. We want to see the gold mining index rising faster than gold. We want to see the gold mining index rising faster than the S&P 500. None of those things are happening right now. They will happen. There are crazy amounts of debt going on. We'll probably have QE4 in 2016. This will come back. It will settle all accounts on this planet. It just hasn't done it yet. So hold tight. We will get there. So what is the takeaway other than it's been a very painful 4 years? So the takeaway is price direction tells the whole story. And I've been at this for almost 2 decades looking at price charts and understanding them and really getting under the skin of them. And the direction of the price tells you everything you need to know. Your money goes up, your portfolio goes up, your net worth goes up or down with the direction of the price. And that's why we study price charts. That's why we look at them. That's why we study that, because it tells us what's going on with the most clarity. We can eliminate all of the BS, all of the noise, and even a lot of our own belief system. These price charts help protect us from our lesser self. And so the takeaway for the week is price direction tells the whole story. And right now the story for gold is it is still down. It's not down and out, but it is still down right now. And let's see what happens, see if it breaks out from its sideways channel. But with a lot of the correction and downward pressure in the stock market, and with bad news coming out of Deutsche Bank, lots of bad news about Deutsche Bank, this was a time for gold to rally and break out into the upside, and it hasn't done it yet. So we'll let the price charts tell the story and tell us when to take action. So hey guys, thanks for joining me really at Fearless Wealth today, where together we protect your portfolio and your future. Until next time, I'm RC Peck. Hey, thanks everybody for being with me for this podcast. I appreciate it. Have put out the training, The Diversification Myth. I hope you've enjoyed it. We've had a lot of great response from it. Just the deep research that I've done on all the crashes and showing you what links them all together, and just really revealing a lot of what I've discovered over the last 18 years. I did get some feedback that some people in other parts of the world were not able to see it live, so I may do it again at a 10 o'clock hour California time. But if you haven't, click on and sign up for it because just the information and the feedback that I've been hearing, that what just level of clarity it's giving people on just understanding that you do not want to go up against math. You do not want to go up against statistics. You do not want to go up against history. You do not want to go up against probability. And that's what people are doing when they align their money with big box advisors or conventional advisors, Or even, it's great, read the newsletters. I love the stories from the newsletters. Those guys are great storytellers. But what they're doing is confusing your brain and creating decision fatigue, which doesn't help you grow your wealth. Thank you so much for being in my world. Look out for that email for the diversification myth training, and I will speak to you then. Take care.